you are watching this video because you've booked an appointment to talk about I.U.L. Maybe you've seen an ad, filled out our informational request form on Index Universal Life. You've seen that, hey, these are great policies for living benefits or tax-free retirement, and you want to know what this is all about. You want to make sure that you get something that is designed specifically for your goals. So I wanted to just have this video today to just give you some information so you can be ready to what to expect for your appointment. All right, so let's dive in real quick. Grab a pen. You want to take down a couple of bullet points. What is an I.U.L? The first and foremost, we're taking advantage of the tax code that says certain life insurance policies that you can grow your cash value and access your cash value tax-free. So tax-free, that's key. So when you put money into an I.U.L, okay, a part of that money is going to go to cover an insurance benefit. So when you pass away, your family's going to get a tax-free check. We know that. Also, there's living benefits. All right, a living benefits, if you get sick, injured, or disabled, you can use that money to pay for bills and pay for care. So one of my clients, she's 42 years old. A couple of months ago, out of nowhere, she had a massive stroke. She can't use the left side of her body. She's not working. She's in bad shape. She took out a $400,000 policy, an I.U.L, that had living benefits. So she's able to access that money to pay for her bills and care. Of course, she's not working. So that's what that means. The rest of the money and the bulk of the money that you put into the account is going to go to the savings account called cash value, and it's going to grow interest and compound. So maybe you put money into a 401k or an IRA before. All right, think about it. We all know how it works. It's in the stock market. So when the market goes up, you make money. When the market goes down, you lose money. Now, an I.U.L is not quite that way. Remember, it stands for Index Universal Life. That index word, it just means it's not in the market, but it does follow the market. So when the market goes up, the interest that you earn also goes up. When the market goes down, you're actually getting a guarantee from the insurance company that you're not going to get a negative return. So you have some protection. So for instance, between the years of 2019 and 2021, the market did very well. So many of your I.U.L policies, you would have earned 8, 10, 12. I've even seen some years where it was 18% interest at its best. Now in 2022, the market did very poorly. It was down about 20%. My personal IRA was down 20%. So if you had 100 grand in an account, now you have 80. In an I.U.L in that year, you would have earned 0 to 1%. So you would have made a great deal of money, but more importantly, you wouldn't have lost anything either. Maybe going back to the 401k IRA, and this is not a conversation beating up on those accounts. They're fine, they're great. But if you're younger than 59, maybe you're like me, I'm 40, and if you've ever tried to take money out of those accounts, you probably found out very quickly, not only are there taxes associated with it, but you're penalized. So the nice thing about an I.U.L is as you grow that account, you're gonna have tax-free access to that cash value. Maybe a financial emergency comes up. Maybe you've heard these concepts about become your own bank, and you wanna use that money for other things like real estate, piece of property, other investment vehicles, and you wanna have access to your cash. I'm a business owner, right? So sometimes I want money for marketing. I want money for other things, and I don't like the idea that my money is trapped somewhere and I can't get to it. Again, that's why we love I.U.L. And then finally, maybe you are watching this video because you saw something about a tax-free retirement. What these accounts are really, really good at is you put money, you grow your cash value in these accounts over a period of time. And then when you're ready, when retirement comes, 65, whatever that age is to you, you say, hey, I want to start taking a tax-free income for life out of the policy so I can live on. That's what their shining point is, to be able to do that. And that's for a couple reasons. Number one is they're not going to experience a downturn in the market. Number two, as that cash value is in there, even when you start taking it out, the way it works is the accumulated value, and your agent's going to talk to you about this, or we're going to discuss this, remains in the account earning uninterrupted compounding interest. So a lot of times you hear these referred to as an uninterrupted compounding interest account. Those are some of the things that you need to know. Now, there's different ways that these can be designed and set up. And this is the important thing. And this is why I'm glad you're speaking to either myself or one of our agents, because we're going to set this up based on your specifications and goals. This is not an off-the-shelf policy, right? This is not, hey, I'm just simply buying life insurance. How much is the 100,000? How much is the 200,000? That's what I call off the shelf. Here's what I want. Give me a quote. Okay. These have to be specifically designed to what you want. So there's two main ways to do this. There's what I like to call protection focused or growth focused. Another way to say that is we do like a 50-50 setup, or maybe like an 80-20 setup. I'm going to make up a fictitious person. We're going to call this person John. He's 40 years old. He's a non-smoker. and he's going to set aside $1,000 a month to grow his I.U.L account. I've seen these accounts set up all different numbers, dollars amount, right? $100, $200 a month, all the way up to $1 million a year, and everywhere in between, okay? So I'm just making these numbers up, so hang with me. $1,000 a month that John's putting in his policy. John A says, I own a home, I got a 7 to 9 year old child, right? I'm married. I want to make sure I have adequate insurance. The critical, chronic, terminal illness, the living benefits are very important to me. What if something happens and I can't work? I want to make sure I have living coverage. Okay, so that's important to me. So we're going to do a 50-50. What that means is 50% of that $1,000 a month is going to go towards the insurance benefit. And at 40 years old, $500, you can probably get several $100,000, $300,000, $400,000, $500,000 of insurance in some cases. And the other half is gonna go towards the cash value, right? It's gonna be a 50-50 blend, somebody that kind of wants both sides of it. Now, compare that to the John that goes, hey, I already got insurance, I have young children at home, my house is like close to being paid off. I have a ton of insurance outside of work. I'm not so much concerned about that. I really like the idea of tax-free retirement, growing my capital, doing all that kind of thing. Okay, same $1,000, we're gonna do an 80-20 split. 80% of it is gonna go towards the cash value. 20% of it is going to go towards the insurance benefit. Therefore, we have a much less insurance benefit, maybe only $100,000, okay? But because we have less insurance, more of the money goes towards the savings and growth. So of course, your money's going to grow faster, right? So we have 80-20, we call that growth focused. 50-50, we call that protection focused. Based on the description, I think I'm more of a 50-50 person. I think I'm more of an 80-20 that's going to give them the signals to say how you want your policy designed. Very, very important. Not all I.U.Ls are created equal. There's a bunch of great carriers out there. We work with them all. You just want to make sure it's set up and done right for you. And you've probably seen there's a ton of stuff out there online, and it's like, is this person right? Is that person right? Are these people have my best interest? And that's why we have the appointment, to hear you out on exactly what you're trying to accomplish with your financial goals, with your health, with your set of circumstances, so we can get something that's right for you. So thank you for watching this video. What to do now is just get ready for the appointment. You've already confirmed, so when the appointment comes, I would ask you to have two things ready: a good internet connection on whichever device that you use, and a pen handy. And we'll look forward to talking to you and helping you then. Take care.